Hello guys, welcome back to my channel. Welcome to a new video. So in this one, I just wanted to do a quick trade breakdown following the weekly outlook video that I have posted yesterday. So on my weekly outlook video, I told you on this pair specifically that I'm interested in a price going higher, taking this short-term high, right? Topping into this fair value gap and then trading lower. So basically, I wanted to see this pattern right here. So this is a weekly candle, price by Monday trades higher, right? And Tuesday, here creating the high of the week by Monday or Tuesday into that fair value gap and taking this short-term high and then expanding lower. So if we go to the chart and we go to the daily time frame, that is exactly what happened. So the people who watched the video, did you actually capitalize on that move to the downside? So as you can see here, we traded higher, printing the high of the week, potentially the high of the week into this fair value gap, taking this short-term high and immediately reject. If you saw it prints live but you didn't take it, tell me the reason so we can fix it. And here's the trade. So for transparency, entered from here. It was a sniper entry and exited here. Also a sniper exit. And now let's move on to the trade breakdown. So how I confirmed my bias and how I knew that the price is going to go to the downside. So let's start with the daily as always. As you can see, it's pretty easy. Expansion lower, leaving a short-term high just below the fair value gap. So when you see price, when you see the market leaves these fingerprints, if you may, so it leaves a huge imbalance, and just below it we have a short-term high. You know that this is liquidity, engineered liquidity, and price will sweep liquidity from here, topping into this fair value gap, and you will see an immediate rejection to the downside. So that was the bias on the daily time frame. And let's move on quickly on the confirmation. So as you all know, I always wait for 3 confirmations from 3 different time frames. This is the first time frame. Now we confirm it. Let's go to the 4-hour and see what's going on. So on the 4-hour, after we cleared liquidity, right, from here, we had a shift or a change in the state of delivery. So this candle took liquidity from this high, topping into the fair value gap. This candle immediately rejected to the downside, closing below this candle right here, right? So this is what? This is a 4-hour order block. Price after that retraced to it and immediately rejected to the downside. But let's break down time frame by time frame, all right? So we have the daily and we have the 4-hour pointing to the downside. Now let's move on to another time frame and let's go to the 1 hour, see what's going on. So as you can see, price rejected heavily to the downside. We have a market structure shift right here. We took down this short-term low, right? Or this is an intermediate term low. I'm sorry, right? Because it balanced a fair value gap. We violated that low, right? From a point of interest. So as you can see, we have reached our objective. So if we didn't reach our objective and the fair value gap is still here, right? This right here, this move can be just a sweep on liquidity or a continuation purge and then continuing higher. But we took liquidity from here and we met our objective on that daily fair value gap. So this is why this is a break of structure. All right. So after an expansion lower, we retraced to that 4-hour order block and we also left a fair value gap on premium, right? So this is the dealing range from here to here. We retrace to premium. So honestly, I see the 4-hour and the 1-hour time frame as one. I like to use them both to confirm my bias. If there is only the 1 hour, that's all right. But as you can see here, we have high probability because both the 4-hour and the 1 hour are pointing lower. All right, so after price retraced to that fair value gap, ask yourself, do we have a reason to go to the downside? Yes, we have resting liquidity from here. We have this market maker buy model, right? So we have this original consolidation. We have equal lows clean lows right here. We have also equal lows right here. All right. So this structure right here should work and should push price to the downside. Now we need only one time frame to execute from. And for that, I used the 15-minute, or you can use the 5-minute. That's not important. All right. So what do we have? So after we retrace to that fair value gap right here, we have a breakout structure, right? We have violated this down close candles, this one and this one, because on a buy program, as I told you before, this down close candle should support price to the upside, and we have also fair value gaps. But this move right here violated all these PD arrays, also this order block right here, and this breaker block. So as you can see that bullish fair value gaps are being disrespected, right? So now we can confirm that our order flow on the lower time frames has turned to bullish into bearish, short-term bullish into long-term bearish. All right, so from this move right here, price left a fair value gap, right? It left this fair value gap, and that fair value gap is located inside a mitigation block. So PD arrays on the buy program, on the sell program, they will act as mitigation blocks, and they will offer resistance for price. So high probability bearish PD arrays will form inside mitigation blocks. All right, so keep that in mind for next time. And this is why I didn't wait for price to come back all the way to here. I took my entry from here, right? So here's my entry. It was like this, my stop loss all the way to here. And targeting those equal lows on the downside. So as you can see, price after taking those lows, it rejected to the upside. I'm still looking for bearishness. I still want for this low to be taken. So I'll be looking for shorts for tomorrow. And one more thing before we wrap this video, I want you to notice something right here. So we have an expansion lower. We have left a fair value gap right here on premium, right? We have a high, price start going lower, but we didn't balance this fair value gap. And we have a high just below that fair value gap. So just like on the daily time frame, this high is a high probability that it will be taken, right? And price would balance this and reject it to the downside. And that is exactly what happened. So as you can see, price tapped into that fair value gap, took that high, and then rejected to the downside. So the same thing that happened on the daily time frame, it happened on the lower time frames. Of course, on the higher time frame, it has a different use case. So on the higher time frame, you can build your buys based on that, and on the lower time frame, you can get a better RR. So when that short-term high or short-term low gets created on that displacement leg on the lower time frame, you can wait for the sweep all liquidity, take your entry from there, and price will just explode to the upside or the downside. So I believe we have come to the end of this video. I hope it was useful for you guys. If you have any questions, DM me in my Twitter account and I'll answer you as soon as I can. Happy trading and good luck.